Hello everyone, I am Pratap here. We are at lesson 23, how to understand bullish or bearish trade setup reports. So in this lesson we will be discussing about how to understand bullish or bearish trade setup, and a small overview I will give about NeoStock MIT, WIT, DIT and HIT reports. And also I will give one example, SBICARD DIT bullish trade setup example. One of the members already asked about this stock, and also I observed this is the best example so that you will understand the kind of mistakes you are making while using these reports. And even before that, this lesson is having dependency on the earlier lessons. In case if this is your first visit or you did not complete earlier lessons, I request you go to the NeoStock YouTube channel. So at our channel, you click on the community tab, then you will get access to this post, our free training program. Here you have a YouTube playlist link. You just click on the link. I'm clicking on the link. Now we get an access to supply demand zone price action course playlist. In this YouTube playlist, you have all the training lessons are available. You just need to go down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. Please go through all these lessons one by one and then strengthen your skills related to supply demand zone price action. And then after that you can get into lesson number 23. That is a bullish or bearish trade setup, how to understand them. Okay, now let's start our discussion. Bullish or bearish trade setup concepts are based on trend that you already learned in lesson 8, and then time frames that you learned in lesson 11, then location that you learned in lesson 12. Location is nothing but curve. After that you learn the most important concept, newly developed concept, price direction. This is the game changer. Because of this, many of the false trades are the trades where you will get losses, we are able to avoid. That you learned in lesson 13. Continuation to the price direction. This is a new concept, decision making table. All the rules based on the price direction, location and trend we have formed in this decision making table for both bullish trade setup as well as bearish trade setup. Based on these rules only, we have identified our bullish and bearish trade setup. That is what you learned in lesson 14. And finally, we have learned about income trades in lesson 15, because we have monthly income trade, weekly income trade, daily income trade and hourly income trade. All these income trades you have learned in lesson 15, and based on these income trades you can use all these concepts, decision making table, price direction, location, time frames, and of course time frames are related to the income trades what you learned. There is a relation. All these concepts you already learned. If you did not learn these concepts, probably you will make mistakes while using this bullish or bearish trade setups. Those who are all sincerely completed these chapters, definitely you will be a master in bullish and bearish trade setups. But still, you are making some mistakes because of not having proper experience. That is what I am going to provide you in this particular lesson. This is the main objective. We know price makes higher highs and higher lows in bullish market. Similarly, lower highs and lower lows in a bearish market. This is what you already learned in lesson 8. In this example, I am showing you a bullish related setup. See, here we have higher high, higher low, higher high, higher low. So this is a confirmation that currently this stock is moving in with a bullish setup. But how you have to plan our trades in bullish trade setup? During the retracement. When prices are retracing to its immediate demand zones in the bullish trade setup. So let me show you here. Price may get support from a demand zone while making higher lows. See here it is making higher low here. Here in this area there could be a demand zone. See here higher low, there is a demand zone. Here another higher low. Here there is another lower time frame. All these are all lower time frame demand zones. That means your entry time frame. Lower time frame is nothing but your entry time frame. Whichever the entry time frame you are referring the chart, here probably you will be having a demand zones. Currently we are talking about bullish trade setup. Same example you can apply to bearish also. But it's in the reverse direction. Okay, here, see why price moved from here? Maybe here there is a demand zone. Currently market is in bullish, this demand zone is helping you making higher highs and higher lows. Previously also see here, higher low. The reason behind this higher low is why price did not go down? Because of this LTF demand zone that pushed the price. The two advantages we got, we didn't get a lower high because this demand zone institutional pending orders pushed the price. How it pushed the price? In such a way, this price again gets a higher high. See here, this push made the price get a new higher high. Not only this, here a new demand zone is created institution. This new demand zone further again pushed the price up and get the higher high. This is how happens in the bullish market. Next time again there is a correction in the market, prices are moving down. And from here it moved because the institutions already created a demand zone here earlier and the pending orders again pushed the market up. How this scenario will be helping us? Probably in this scenario, you would have taken a long trade. See, you would have got a good profit. Again in this scenario, again we took a long trade in this zone. And again after that price moved up, we got a good profit. That is the main advantage of bullish trade setup. Of course, we go for short trades in bearish trade setup. You already land. Trend is your friend. Until the end, when there is an end. I mean when there is a bend, not end. Trend is our friend until the end when there is a bend. This you already learned in lesson 8. Because we have multiple chapters in lesson 8. Each chapter I explain different scenarios about different trend related changes. So that's why always in bullish or bearish trade setup we are getting profits when prices are retraced back to the demand zone. So this is the general concept. Still, sometimes there are some issues. What is that issue? Look into here. Because prices reached here, because this is a demand zone and it is a bullish trade setup. And what is our observation here? Here institutional pending orders that will push the prices up. So that if we take a trade in this zone, we get profit, right? But sometimes we may experience this LTF zone would be violated. It's not that every time price reaches to the LTF zone in bullish scenario, the prices may not go up every time. There are some special scenarios. This LTF zone will be violated. See here in this example, what's happening? Prices further came down and finally this LTF demand zone is violated and reached the next LTF zone. A demand zone is violated now. When a demand zone is violated, what is your general observation? Now trend is changed. Because when a demand zone violates, trend will be changed from uptrend to now sideways. Now you cannot take a trade here because the trend is changed from uptrend to sideways. So it is no more a bullish trade setup. You may feel like that, but after that what will happen? Prices further went up. You might surprise how it is possible because the trend is changed. The point you are ignoring, or many people are ignoring in the initial stage, trend is not at a LTF time frame. trend is at ITF time frame. Remember, these are not ITF zones. These are the LTF zones. LTF demand zone is violated. Still it is a valid, trend is valid because your ITF zone is not violated. Currently in this chart you are looking at the LTF zones. If ITF zone is violated, then we will agree trend will be changed. Still ITF zone is not violated. When prices comes into this next LTF zone, still you can go for a long trade. This is what many people are ignoring. The reason is our software is displaying the immediately available zones to the current price. Say this was the nearest zone earlier. But when you are analyzing the stocks based on this, you should also identify one more demand zone below this. You have to draw and you have to keep it in your chart. In case due to any reason this zone is violated, again you will plan your trade in the next demand zone. Here you will get small loss. Why I am saying small loss? Because risk management. You are already aware of risk management. If you can handle the risk, then only you go for this trade. Otherwise you will ignore this stock. The risk should be within your accepted limit. Because it is, you can't take trade blindly, right? If the risk is within your accepted limit, then only you take your trade. That is what you learned in lesson 19 and lesson 20. So because it is within your accepted, even the zone is violated, it is okay for you. Because it is within your accepted limit, you look for the next opportunity. So that is the reason why always you should focus from the ITF time frame, the trend, not from the LTF time frame. LTF time frame is only for taking the entry. Look into this ITF time frame. Let us assume this chart is at ITF time frame. Now based on this, now you are drawing LTF zones. Now again you go to LTF time frame. Now you have drawn LTF zones. And these zones, if you see from ITF time frame, they looks like this. Now what will happen? Two options for you. Price came here and you take a trade and it will move up. This is the option number one. And you will be happy because immediately it is a successful trade. Option number two. Here you take a trade. It is violated. Now again you take a trade in the below demand zone. Now again it moved up. You got the profit. From the profit you deduct whatever the minimum loss you got. Still you feel your profit is big. This possibility is also there. But you might be wondering why this LTF demand zone is violated. This is the question many people will be asking. There are several reasons why a zone will be violated. Maybe on the day the market situation is, overall market situation is not good. That is the reason why your zone got some pressure, extra pressure, and violated. This could be one reason, or another reason could be for this particular stock on this day the supply is very strong. Institutions decided to violate this. They pumped a lot of supply and consumed all the pending orders. There is a lot of struggle, lot of time. In that situation, price will be moving within this zone for so much of time, and finally all the pending orders are consumed. Finally zone is violated. That is also another reason. You can't rule out. Like that, we might be having several reasons why a valid zone is violated. If a zone structure is not good, the zone will be violated. Anyway, we don't plan trades in that because you already learned in lesson 16 when a zone will be violated. You know the reasons. But a valid zone, when it is violated, there could be several reasons. At least two good reasons I told you. At the time you have to accept this loss because it is within your accepted risk management. That's why you took the trade. and the loss is a very minimal loss. You need not worry about that. Next opportunity you should look for. Again, prices entered into this zone and then you got the profit. You may ask a question, even this zone also may violate, right? You may ask. Yes, anything will happen. Second time also you get, but that is a worse scenario. Rarely happen. I'm not saying it won't happen, but what I'm saying, such kind of situations happen in a rare way. That is a different story totally. It won't happen every time. That's why rare situations are exceptional situations. Those exceptional situations, the loss you have to accept. But in the remaining situations, first demand zone is violated, there are higher chances the second one will be getting a good opportunity. But here again, another point you should ask. When this demand zone also will be violated, the second one also, generally what kind of trade setup we may experience for the second one? In many times. For that, you should also focus on ITF zone. Okay, we are talking about LTF zones. Where could be the ITF zone? Definitely there should be ITF demand zone, right? Maybe the ITF demand zone somewhere here. Let me draw. See here, we have a ITF demand zone. If you observe, the second LTF demand zone is inside the ITF demand zone. Maybe it is inside or maybe it is overlapped, anything will happen. That concept you already learned in lesson 16. This is called zone confluence. Observe both these LTF zones. What is the major difference between these two LTF zones? Both are valid, both are supporting bullish trade setup. But the difference is, first one LTF demand zone is alone. But second LTF demand zone is not alone. It is having a confluence with ITF demand zone. That means it is along with ITF demand zone. But first one is not like that, the top one. First one means the top one. The top one is not like that. The top LTF demand zone is sitting alone. It is not having any support from higher time frame demand zones. In such kind of trade sets, the LTF demand zone not having higher time frame confluence, many times they will be violated. But not always. If the bullish trade setup is very strong, the market is very bullish, at that time what happens? Prices enter into this LTF demand zone and then they will move up. If the overall market is not strong, maybe that day bears are dominating, at the time there are higher chances this LTF demand zone will be violated. I am saying there are higher chances. But there are times this LTF demand zone which is sitting alone also might be having a very strong order flow sometimes. At the time price came here, even the market is also bearish, still it will push the prices up. These are all the things we cannot identify. That's why we are using risk management. And then based on that, if the risk is within our accepted limit, we are taking chances. If the chances are failed, then again it is okay with that stop loss. We lose small amount of money. Then again we look for the trade in the next LTF demand zone. But some people, they don't want to take any chances. Their setup is very clear. What is their setup? They just ignore this first, the top LTF demand zone. Let me remove it. They are ignoring. Actually, there is a demand zone. They just ignore. They as they feel there is no demand zone. If they feel there is no demand zone, the picture will be like that for them. But actually, there was a demand zone. They just ignore. Then what is their trade setup? When prices are retraced back to this zone, then only they will take the trade. Otherwise, they don't take the trade. Let us assume prices reached here. They got an entry. And this LTF demand zone is having higher success rate compared to the earlier demand zone. But what is the disadvantage? Chances of getting into this LTF, second LTF demand zone is low. Because if this LT of demand zone, order flow is very strong, what will happen? It will not let the prices get into the second LT of demand zone, which is inside the IT of demand zone. It will not let the prices. The moment prices enter, it will push the market up. So we won't get the trade. We keep on waiting, but we won't get the trade. And here the trade opportunity we will miss. Further, if you take your trade in the LT of demand zone, if this is violated, you get a stop loss hit. Some of your money, even though it is within your accepted limit, still you will be losing some money from your capital. So that's why you have to take a decision. Even if you miss the trade, is that okay for you? If that is the case, you go for this setup. Your LT of demand zone is inside the IT of demand zone. Only in that setup only you accept the trade. And it is having a higher probability compared to the earlier setup. Compared to the earlier one, this is having higher probability. So it is having more success rate. I am not saying it won't be violated. There are situations, even this zone also will be violated. But there are higher chances prices come here. In case if prices come here, definitely there are higher chances price will move up. So that's why I have seen some people only trade such kind of setups. Anyway, I will be explaining about these trade setups based on zone confluence in detail in our next chapter. That is the next training lesson is only about zone confluence trade setups, different trade setups. But still I am giving you some overview here. So this is the way some people will do. But there is a possibility that even ITF zone also will be violated. There are times ITF zones will be violated. At the time trend will be changed. When it will happen? During trend shifts. When trend shift will take place, we can't tell that. There only we get the bend. When trend shift takes place, then a bend will be happen. That is what a trend is our friend until the end when there is a bend. Until the bend happen, you may not be knowing there is a bend. After that only you know. These scenarios I explained in lesson 8, trend. I think the last part of the last two parts of the lessons I explained about these bends in detail. In such kind of situation, you have to accept the stop loss. There is no other option. There are many situations you will be in a position to identify this zone will be violated. Because order flows may not be good in the lower time frames until the 5 minutes time frame. That way you will be in a position to at least 80% scenarios we are in safe condition. We will be in a position to identify the zone will be violated and we won't take the trades. But there are rare situations, the 20% scenario, the price structure even in the fine-tuned 5 minutes area, the order flow is very good, but the zone will be violated. Rare situation, 20% scenarios. And on that day, if your stop loss is hit, we have to accept. There is no other option. That's why risk management is very important. The risk is within your accepted limit, whatever the concepts you learned in lesson 19 and the earlier lessons. Based on that, you will be following your risk management. Even if you got the loss, it is a minimal loss, it is a negligible, and it won't hurt your overall capital. So this also happens during the trend shift. And when trend shift takes place, until it takes place, we won't be in a position to tell there is a trend shift. But as per the 80% concepts where you can identify when a zone will be violated, that you will be in a position to identify well in advance, this zone is going to violate, this ITF zone. If the ITF zone is violated, trend will be changed, you are aware of that. In those scenarios, you won't plan any trade in that particular stock. The 80% scenarios where you can identify when a zone will be violated. But 20% scenario, the probability is less. Once in a while only you will see such kind of stocks. Order flow is good, but still zone is violated. That is a rare situation. At that time, definitely we get a hurt. because our trade is stopped out. But still it is okay because it is within our accepted limit. This is what you have to understand. See, if you keep all these points in your mind, you can't take any trades. You have to accept a minimum acceptable risk, that is our stop loss. They happen rare situation. Many times you get profits. Just because of one rare situation you get loss. Why do you want to stop getting your profits? Okay, now how to understand bullish or bearish trade setup? In that, what could be our best plan while using bullish or bearish trade setup? What could be our best plan? What kind of care you have to take? Few points I will tell you. Keep these points in your mind each time when you are planning your trades. The first one, make sure there is a proper fine-tuned 5-minute zone. Why we have to make sure? Not for trade point of view. It need not be you can plan a trade in that. You may take a trade before itself, because they are all bullish trade setup or bearish trade setups. Sometimes until the fine-tuned area, your order may not reach. So that is the reason why sometimes you plan a little well before your fine-tuned 5 minutes area. But if your risk does not permit, there is no other option. Probably you will plan your trades within the fine-tuned areas. But whatever it is, why you need to make sure there is a proper fine-tuned 5-minute zone? If there is no proper fine-tuned 5-minute zone, your zone will be violated. You know that when a zone will be violated. So that is the reason why you need to identify this. If it is not there, zone will be violated. Such kind of zones we never plan our trades. Because you know that zone will be violated. Do you plan your trade? No. It is foolishness. If you are planning a trade, even though you know there is a higher chances zone will be violated. So that's why our concept saved many trades earlier. Next, keep an eye on overall market. And a continuation to this, there is one more important point. I'll come back to that at the end of this slide. And before that, keep an eye on overall market movement also. Sometimes the overall market movement, for example, if you take our overall market in India is Nifty. Different countries we have different indices. So here we have Nifty or Sensex, anything. If the overall market is going up, there are some set of stocks, they will also go up. Which kind of set of stocks? If overall market is going up, and let us assume Nifty is currently supporting bullish trade setup, the other bullish trade setup stocks also may follow Nifty accordingly. Similarly, if Nifty is currently bearish trade setup it is supporting, there are certain bearish trade setup stocks also will be following Nifty. So that means many of the stocks follow the indices. Some stocks they move against the indices. That is a different story. That is against the overall market. We have suppose Nifty bullish trade setup. There are few stocks bearish trade setup supporting. They don't follow Nifty on that particular duration. So this is the reason why if Nifty is bullish trade setup, your other bullish trade setup stocks also, you just keep a close eye on Nifty when you are taking trades. I'm not saying you should not take a trade. You may take a trade, but you should be very careful. Sometimes it might be helping you to exit a little earlier or to book the profits a little earlier. Just an observation for your decision making. And keep an eye on sectorial movement of the stocks also. Sometimes Nifty might be in favor of your current trade setup related stock, but the sectorial indices may not be the same. So for example, you have selected a bank sector related stock. Current market, it is a bullish trade setup, your stock is supporting, and Nifty is also on that day, it is a bullish trade setup moving. But if you look into the bank related sector, maybe bank Nifty might be moving down, the sectorial index. So that means the sectorial index may impact our stock, even though overall market is, that that is Nifty, is in your favor. Sometimes it is possible. So that is the reason why keep an eye on sectorial stock movement also. I am not telling you exit from the stock. Just keep an eye. Sometimes in your decision making, you are in a dilemma whether to continue or not. At the time, these two price directions might be helping you some extent. Some extent, I am using the word some extent. Next point is important point. Do partial profit booking or trailing stop when prices reach to one of the lower time frames of your opposing zone. Suppose you have taken a long trade. In 15 minutes time frame, you have taken a trade. Let us assume. So your supply zone target should be 15 minutes supply zone. Now prices reach to 5 minutes supply zone. Because before reaching 15 minutes supply zone, there could be some 5 minute zones. They have to be violated and then only prices will reach to your 15 minute zone. Sometimes these 5 minute supply zone order flow might be very strong. They might be preventing the prices to go up. They will be very strongly holding the prices. Sometimes even they push the price down in such a way, your 15 minutes demand zone where you took the trade, that will be violated sometimes. That possibility is there. That way your 15 minutes demand zones will be violated because of a 5 minutes strong supply zone. I am not saying it will happen every time, sometimes. But many times these 5 minutes zones will be violated. A small movement will be there, 5 minutes demand zone and supply zone. After that, 5 minutes supply zone will be violated. Finally, prices reach to your target 15 minutes supply zone. But there are some special scenarios. 5 minute zones will be very strong and they may prevent. If you have any such kind of doubts in your mind, what I want to suggest to you is do a partial profit booking in that particular zone, lower time frame zone. Because of this, what happens? If something happens against you, at least whatever the stop loss, you would have gained that money. That means probably you will be no profit or no loss situation. Only you will be losing the time. Or sometimes you slight, very negligible loss you get, or sometimes you may get a small, very small profit. You may get also. Because of doing this partial profit booking. Suppose a trade after that your 5 minute supply zone is violated, finally reached your overall your initial 15 minutes target supply zone. At the time what you do? You book the profit for the remaining stocks and at least you get some decent profit. Some people use these kind of strategies. Safe trades. Basically people who look for very safe trading, they follow this kind of approach. One disadvantage is your overall profit margin will reduce. But still it is a safe trading. The time when you get losses, at least your loss will be recovered. These kind of strategies also you can book. Please remember, it's a very important point. When you can use such kind of scenario, when these 2 points, your overall market situation is, you are feeling doubt. At the time it reached to a 5 minute supply zone instead of before reaching 15 minute supply zone. But your overall market is not really convincing to you, or maybe your sectorial indices is not doing good. So you may feel probably your stock also may go down. Such kind of doubts you have in your mind. At the time you do this partial profit booking. Or even you can use a trailing stop loss. You already learned trailing stop loss in lesson number 19. 18 or 19? Okay, one of these lessons you learned. So implement that concept. So either one will help you to secure some profit, at least a minimal profit, or at least worst case scenario, whatever the stop loss you set, that money you will get back. That way your capital, there won't be any loss. This is one point you can adapt. See, these are all, you will be learning from the experience, all these points. So you have to start looking into them. This is the care you have to take. And when it comes to NeoStock MIT, WIT, DIT and HIT reports, every day we are publishing MIT, WIT and DIT. Earlier I published HIT also, but I have seen people are not looking into them, so I stopped it. But they also will be useful to you sometimes. And the zones displayed in the report are near to the stock price. Because always for the current stock, whichever the nearest demand zone, whichever is the nearest supply zone, that is what I am displaying in the report. Because it is not possible to display all the zones, right? But for you, what is the important? Identifying the stocks having bullish trade setup and bearish trade setup. You have over 200 stocks are there in F&O category. If you want to analyze each and every manually, it is not possible. Because of the software, from the 200 stocks, maybe you are getting some 10 stocks or 12 stocks. A minimum at least what you can focus you are getting. Now go to that particular stock. Suppose if this demand zone is violated, what is the next demand zone? You identify and you draw and make it ready. Is it within the ITF zone? Because if the zone is below the ITF zone, you can't take trade in that. Because if ITF is violated, your trend will be changed. So that's why always you have to see whatever the next demand zone below to current demand zone, what is the next supply zone above the current supply zone. Those things should be within your demands, ITF demand zone and LTF demand zone. In case if the first one is violated, okay, let me plan our trade in the next one. Is it convenient? Is it within our risk accepted level? Is it having proper fine-tuned 5 minutes order flow? All these things you will verify and then you will plan your trades. And the structure of the report is explained in lesson number 21.1. I already explained the structure. In case if you did not complete the report structure, please go to the lesson 21.1 and understand all the columns, everything. Because high liquidity zone trade setup or bullish or bearish trade setup, the next trade setup, zone confluence setup, you will be learning in the next lesson. For any setup, the report structure is same. That report structure I already explained in lesson 21.1. Even though lesson 21 is about high liquidity zones, but the report structure is, especially lesson 21.1 is, for any kind of setup, the report is common. That is the beauty of our software. I have developed a common template for any kind of trade setup. The report structure remains same. But the algorithm rules will change. And stock filtering will change. But final report structure remains a reusable structure that I explained in lesson 21.1. So anybody should go through this lesson. And the next important point, the search strategy and the LTF time frames in the reports explains the type of the report and the search filters applied. Every report is having a search strategy at the top of the report. So there you need to look into that search strategy, what kind of report it will tell you. It is a bullish trade setup, bearish trade setup, and the time frame is also there, LTF time frame. Based on the time frame, you can identify. If the LTF time frame is 15 minutes, you can say it is a DIT trade setup. If the LTF time frame is 75 minutes, you can say it is a WIT trade setup. That way you can identify. And it is bullish trade setup or bearish trade setup. In the search criteria, it will tell you. Based on that, you can identify these reports are bullish or bearish trade setup. If you don't see the word bullish or bearish, probably those reports are some other kind of reports. That's why search strategy is very, very important. And other important point you people are making that I will explain in the chart. The SBICARD. See, this is the SBICARD chart. Our software identified when on Thursday. Thursday is when is the last candle? This is a 20 June 2024, because some people may look into this report after 1 year or 2 years. These are training lessons they may go through. So that's why I'm telling you the timestamp. The closing, the last candle is, this is a 15 minutes candle. This is on Thursday, 20 June 2024, 15:15 is the last candle. This is the market close. And as I told you earlier, our NeoStock software gives you the nearest demand zone to the current price. This is the current price, rally, base, rally. This is a ERC candle, that's why this is not a valid zone. ERC candle, after that another ERC candle, between there is no base candle. So this is a valid zone, rally, base, rally. So this is the nearest to the current price. Similarly, what is the nearest to the supply zone? This is the nearest to the supply zone. This rally, 2 base candles and a drop candle with hidden body. And when this zone was created, supply zone, the leg-in is on 26th April, 14:45, Friday. This is the leg-in for the supply zone. And what about the leg-in for the demand zone? This is on 19th June 2024 at 14. After that, 1 base candle. So this is what our software told. And from this demand zone and supply zone, there is a good enough RR is also there. So if you want to check the RR, you can use this tool. You have a long position tool in TradingView. I already explained about this tool, I think in practical sessions of phase 1 training. In lesson 9, one of the videos I explained. So this is a long tool, and this is your, let us say, this is your entry, target, and your entry is somewhere here, and your stop loss is at the distal line, a little below, maybe some stop buffer. I added some stop buffer below this. And what is the RR we have? We have 1:7.8 RR is there. So when this report was generated by our software on 20th, end of the market hours, 20th end of the market hours on Thursday, this is Thursday, we have generated this report. The last trading session, when I am recording the video on 22nd, Saturday. The last trading session is Friday, 21st. So 21st, you have to observe this stock. This DIT stock, 21st, in case if you don't get the trade, if price did not reach into this zone, even next trading session on Monday, that is the 24th, today 22nd, Monday is going to be 24th. Also you can use this stock. As long as the trend does not change, the price direction, everything does not change, this zone, these zones are valid. DIT zones, MIT zones, most of the time HIT zones will be invalid within intraday itself. But at least DIT, WIT, MIT, these stocks, they are valid for few days. Either until trend changes or price direction changes, they are all valid. There is no rule that these zones are valid for only 1 day. There is no rule. Only high liquidity zone strategy only valid for 1 day. But remaining DIT, MIT and WIT trade setups, they are valid until the trend and price direction changes. So we have a very good RR is there. So it is a good stock to consider. But what kind of mistakes we do, that is what I want to explain. Everybody please concentrate. First mistake people will do, they take blind entry here. No, don't do that. First you have to check whether this is a valid zone or it will be violated. Because in lesson 16, you already learned when a zone will be violated. If this zone is not having until fine-tuned 5-minute zone, if it is let us assume if it is a daily demand zone, until 5-minute zone you need to fine-tune. Let us assume it is a 75 minutes demand zone. Again, until 5 minutes zone, you need to fine tune. Okay, anyway, this zone is 15 minutes zone. So one more time frame below. That is the 5 minutes you need to look for. If a 5 minute zone is there inside a fine tuned 5 minute zone, it is a confirmation that the zone is having a good order flow. Okay, for that I am going to the 5 minutes time frame. Let me draw a 5 minute zone. Yes, we have an excellent 5 minute zone is there. We have a rally, base, rally. Okay. So we have a fine-tuned 5 minute zone is there. It is giving a confirmation that there is a good institutional order flow. How good it is, that we will see later. But definitely we can believe there is an order flow. Okay, when is the last candle? The last candle is on 20th. Because I am using a TradingView replay bar, so that I am currently showing you the Thursday. Now Friday market is started. What will happen? Let us check. But we will check from 15 minutes time frame. Because our entry time frame is 15 minutes. Where to take the order? In the 15 minute zone you can take the order. Or in the 5 minute zone you can take the order. Or in the 15 minutes the risk is high. You can go to the type 2 proximal. That way also you can take the order. The type 2 proximal entry, 15 minutes. Or what you can do, within this fine-tuned area, 15 minutes fine-tuned area, you can take the order. Either way you can plan. But here the 5 minute zone and the fine-tuned 5 minutes, almost they are same. See, almost they are same. So you can take a trade here. But anyway, let us assume this is the type 2 proximal of 15 minutes. Exactly the same is also fine-tuned 5 minute zone. So it is going to be an excellent trade for us. And we got a very good profit here. See, we got a 1:7 RR is there. Now market is started. But remember, market is dynamic. When market is dynamic, things will change sometimes. Whatever you planned, the planned things will change. This is the mistake many people are doing. That's why I am focusing on this. What is our planned things will change, you may ask. I will show you. And then I will give the explanation. Okay, market is started. This is the first candle. Now let us observe the price action. Now you have seen a drop candle, a base candle, and a drop candle. Now what happened? A new 15 minute supply is created. So that means our target is changed now. Many people, the mistake they are doing, still they are keeping this target. That is wrong. This was the target before we planned our trade. Now after this candle, market is dynamic, a new supply is created. Now your target will be changed. Now you have to ignore the earlier one. Now can we accept the trade? The risk, if the RR is good, you can accept the trade. Do we have good RR? Check again. You have this long position tool. This is going to be your target. A little before that, because generally we exit a little before. And entry we want to take exactly at this type 2 proximal or a little before. Anything is okay. A little before is also okay. Some entry buffer. And our stop loss could be either within this 15 minute zone, some stop buffer, or 15 minutes, within 5 minutes some stop buffer, or exactly within the 15 minutes or some buffer before the 15 minutes. Anything, it is all depending on your risk management. If I plan like this, still I am getting 1:5 RR. So it is excellent. No issues. Earlier you have 1:7 RR, now it is reduced to 1:5. Still it is good. Up to 1:3 is good. If you are a highly experienced person, 1:2.5 is also acceptable. Okay, now next candle, what is happening? Let us discuss. Oh, sorry, something wrong. The replay bar is gone. Some mistake I did. No. Stock is changed. Okay. So this was the situation we were discussing, drop based drop. Okay, now next candle. We have another drop candle. Base candle and again a drop candle. Now what happened? Now again situation is changed. Now you need to change. Drop base drop. Now is it having good RR to handle this? Let us check. We got 1:3 RR is there. 1:3 RR, but sorry, some buffer also we need to keep before this. Entry buffer. Okay, 1:2.95, that means 1:3 up to this level. And let us see what happened to the market in the next candle. Now price entered within this entry buffer area, close to this entry buffer. Let us assume we got a trade here because we added some entry buffer. Let me draw a horizontal line. So actually it is 1:2.5 RR. Highly experienced people can take a trade here. 1:2.5 they will take. But those who are accepting 1:3, you might have missed this trade. But anyway, I am telling you, you would have got a trade here. The next candle, let us see what happened. So it reached close to the zone it reached. You might have exited either in this candle or maybe the next candle. Let us see. In one of these candles, definitely you would have exited because it reached near to this zone. So that means you would have got a small profit here. In this setup. But now look into the other setup. Now we have this zone. Week to week. There are some people, they want to take a trade in this week. Now let me change the replay bar again so that you get better clarity. They took a trade at a higher wick of this zone. When you take higher wick of the zone, you won't be having the RR. Let me show you what is the RR now. So this will be your entry exactly at the wick, and this will be your stop loss, and you are getting only 1:1 RR. You are getting only 1:1. Do we accept 1:1 RR? No. You have to reject the trade. But now people will argue. How they will argue? By the time the candle reaches to this entry, it is zone is not, the candle is not zone, the candle is not, I repeat, the candle is not completed. Maybe it will pick up the orders and then again it will go back. There could be a huge rejection. When there is a huge rejection, if price is closed somewhere here, definitely this is an invalid zone. This is not a valid zone. Then which is the valid zone? This is the one above. We have a sufficient RR from here to here. What was the RR we have? Okay, week to week here only we have 1:2.5. Okay, experience people point of view, this is 1:2.5. Okay, it is a valid RR. What we are saying? Price just before entering into the zone, the candle is not completed. We can't confirm this is a drop based drop. So we took the trade. After taking the trade, now it confirmed a new zone. This is what some people will argue. But I have already taken a trade. Now with this 15 minutes, I am getting only 1:1 RR. What I have to do? Do I need to book profit with this 1:1 RR? Because at least we should have a minimum 1:3 RR or 1:2.5 RR. Either one is okay. Can I wait up to here? No, I want 1:3, not 1:2.5. So can I wait until prices reaches to the supply zone? This is how some people will argue. And this argument is a very wrong argument. Always your target should be the nearest 15-minute zone. If this 15-minute zone is there, before taking the trade it is there, then probably if the RR is not there, you won't take the trade. You should not take the trade. But before this zone is formed, you took the trade. After that a new zone is created. What I have to do? If prices reaches to the supply zone, you have to exit. Whatever the profit, you have to exit. See next candle what happened? Prices went a little down and then it started moving up. And in this candle, prices came very close to this. Actually here, this way also you can draw, wick to wick. They came close to this zone. Somewhere here you need to exit. Generally exit a little by keeping some buffer before. So you have to exit. If you don't exit, what will happen? At least here you got an opportunity to exit. Came very close. Or in this candle, you got again another opportunity to exit. Just a little before. So this is okay now, very close. You have to book your profit. The reason is it reached the target. You should not argue I am getting only 1:1 profit. Because this target is changed. Targets are dynamic. That is the point you have to tell. Previously several times I told this point. Because they are all in HLQ analysis I explained. Many people did not watch those videos. Whoever is not watching HLQ analysis everyday videos, they are losing some important knowledge. Because they're all practical scenarios, all the zones. Generally in practical scenarios, a lot of learning will be there. You will be learning so many new points. But many people are ignoring the HLQ analysis videos. Whether you use HLQ zones or not, that is a different story. But analysis gives you a lot of experience. The many people who watched the HLQ zone analysis videos and gained a huge knowledge from my experience. In those videos, several times I told this particular point. Markets are dynamic. When a new zone is created, immediately we should adjust our entry or stop loss, whichever is applicable. Whether it is valid or not valid, we need to again reconfirm. And then you have to plan your trades. If you already took the trade, after that a new target is created. Whichever the new target, if prices reaches there, you need to exit. Now reaching to this, the original zone is very, very difficult. The reason is this supply zone has to be violated. After that, this supply zone has to be violated. This is the first 15 minute supply zone. This is the next 15 minute supply zone. When all these zones are violated, only your target will be reached. But before that, that means institutions are creating new supply again and again. That means institutions are making more supply into the market. They are sending more supply into the market. There are higher chances that this demand zone will be violated and trend will be changed. Because this is the 15-minute zone, your trend should be 75 minutes. So you need to look into 75 minutes time frame. In the 75 minutes time frame, here you have a rally, 2 base candles and a rally candle. If this is violated, then trend also will be changed. So that is the reason why. But here there could be a 15-minute zone within this area, might be there, below this. See here you have a rally, base, rally, LOTL zone is there. And also there is one more also here, drop, base, rally. This is the 15-minute zone. Definitely this will be within the 75-minute zone. Now I am shifting to 75 minutes time frame. See here, we have a rally, 2 base candles, rally. It is exactly within this area. If this is violated, probably institutions will pick up the orders from here. Okay, anyway, what happened here, you have to book the profit. But many of the people thinking that, okay, prices will further go up, this will be violated. Don't think like that. Target is reached, that's it. Once target is reached, you have to book the profit. You never know how strong the order flow is within this area. You can't trade based on your luck. Let's see what happened after that in the 15 minutes time frame. Market further went very near to this zone. See, again market went near, almost, it's a negligible distance. So one of these candles definitely would have exited if you are following the principles. See, after that market came to this zone and then violated. Why it happened like that? Because this zone is already tested, that is one reason. Consumed the existing pending orders. Next time when it came, supply is very strong. And because supply is very strong, remaining pending orders are easily consumed and zone is violated. And just below, there is again a demand zone is there. Of course, there is one more LOTL zone is also there. If I delete this, it picked up the orders from the below zone. Even that one is violated. This is also violated. And this is the last one, which is having confluence with 75 minutes zone. This 15-minute zone. So from here it picked up the orders. This is the last opportunity. Even if this one is violated, trend will be changed. Now from here again it moved a little up. From here it picked up the orders. See, there is again a 15-minute zone, supply zone. In bullish trade setup, what happens? See here, from here it picked up the orders and reached the 15-minute supply again. This is a drop base drop. Here you would have got a trade here. If you go to the 5 minutes time frame, definitely some order flow will be there here within this zone. You have a drop base, rally is there. This is the 5 minutes demand zone. So there is some order flow is there inside this zone. Now go to the 15-minute zone. And moreover, this 15-minute zone is inside the 75-minute zone. See, it picked up the orders from the 5-minute zone. It went deep inside, but it didn't violate the zone. After that, see the rejection and moved. If anybody would have taken a trade here, it would have been a very good profit. How much RR it would have given you? Some stop buffer here. Let us assume this could be your entry. And just before small gap buffer, you might have exited. It has given you 1:3.46 RR. And here 75-minute zone, this 15-minute zone is inside 75. Let me go to the 75 minutes time frame and draw the zone. Here you have a 75-minute zone until this rally, 2 base candles and a rally. Light color I am giving. So inside the 75 you have a 15-minute zone, inside that you have a 5-minute zone. You have a perfect zone confluence. Inside a 75 you have a 15-minute zone. Inside a 15 minutes you have a 5-minute zone. Exactly from there it picked up the orders and reached the next 15 minutes drop, base, drop. The next 15 minutes supply, it reached the prices at 1330. After that, what happened? In the last trading session, again this supply zone is violated and market was moving further up. Again came down. And again moved up and again came down. And again, once again, it picked up the orders, the last candle, and moved up. That is before closing the market. But finally, it gave a very good return to you. During the intraday itself, it has given you short-term return. Why? Because the zone is having confluence with its intermediate time frame zone. That is what previously I shown you in the presentation. Let me show you the scenario. This is the one. The LTF zone is having confluence with ITF time frame. See the heading here, ITF time frame confluence. That's why I told you this is a high probability setup compared to the individual zone. Excuse me. This is the individual zone. But you may say this is also having confluence with 75. True, actually it is true. This entire zone is 75. At the distal line, at the proximal line it is having confluence. Here it is having confluence at the distal line. Actually the first one also gave you trade till the next 15 minute zone. But RR is not good. But next one RR is good. And with good order it reached. Actually you should have rejected this trade because RR is not good. And you should have accepted this trade because RR is good. Who is making the difference here? The 75 minutes ITF zone. Because many times we ignore the 75 minutes, the ITF zone. With respect to ITF, where is our LTF zone is there? Many times we ignore and we will be missing the opportunities. What NeoStock software report you are getting is the nearest zone to the current price you are getting. That means blindly you have to depend only on that particular LTF zone. Go to ITF time frame and draw the ITF zone also. See how we did analysis in this stock? The same way you can do the analysis. That's why always I told you people earlier also. Draw the HTF zone, draw the ITF zone. LTF zone anyway software is giving you. Based on that, do a top-down analysis. That is what I told you earlier several times. But I don't know how many of you really listened this. Why target is changed? Because supply is very strong. That is what you have to understand. Supply is trying to dominate. That way we got a very small RR. If you already taken a trade before confirmation of this new supply, then you have to exit when prices reaches to the new supply. If you did not exit, the meaning is you are not following the rules. That's why this is a very important example. At least now you might be knowing how you are making mistakes. The mistakes you are making, I already shown you in the chart. This is the mistake you are doing. Software has given this zone, you are just taking the entry. In case if this zone is violated, what is the next plan? You are not preparing that next plan. Because you are not preparing your next plan. If this zone is violated, what to do, you are not able to understand. So SBICARD is a very good example. Hope you got the clarity. Generally, how you do the analysis? First you draw the zones. Okay, let me delete everything so that I will quickly explain in a fresh way. Okay, this was so this was the supply zone, that is for target, and this is the demand zone, and you fine tune this. What I am trying to say, go one more time frame higher, that is intermediate time frame. For 15 minutes higher time frame is 75 minutes. And draw the 75 minutes zone. We have a rally, 2 base candles and a rally candle. You draw the 75 minute zone. Maybe use light color. So I am using daily color, light color, daily demand zone. Now the 75 minutes demand zone, our software has given a confluence. Very good. Now again go to the 15 minutes time frame. Now you are seeing one more confluence you are seeing here. Drop base rally. This rally base rally is again having confluence. Okay, fine. Anyway, it picked up the orders from here and moved up. This is the main source. drop base rally is the main source. What you need to confirm, whether 5 minute zone is there or not, you need to confirm. So go to the 5 minutes time frame. In the above zone you already drawn. In case if you did not draw, again you draw. Let me delete this 5 minute zone. Let me change the color to 75 minutes color for 15 minutes time frame. Okay, 15 minute zones are here now. What you have to do? Just go and draw 5 minutes fine-tuned zones. Here we have a 5 minutes fine-tuned zone is there. You draw a 5 minute zone. Thick color I am using, now it is very clear. So inside, and also here you have drop base rally is there. This is the way you can draw. To minimize the risk, you can keep like this, in case if you want to minimize. If this zone is violated, next you will plan. And here also you have a drop base rally is there. So this is also you can plan. If this zone is violated, the next one is also violated, this is the one. That way you can plan your trades. Hope you got the clarity. Just depending only on the nearest zone that is displayed in the report. Sometimes, mostly they work, but sometimes if they fail, what is the next trade plan? If you don't plan that, definitely you will be missing the opportunities. See what happened? We missed a very good opportunity here. Once the market is started, here RR is not there, so you left it. And here you got the trade. And at the time, 15 minutes target. You have this 15 minutes target is there. Sorry. This is the 15 minutes. And you have also seen from here to here, you have a 1:3.5 RR is there. And after that, it reached the target. And within 15 minutes, trade is completed. At 1 o'clock, you got the entry, 1 o'clock 5 minutes candle. Sorry, we are in 15 minutes time frame. 1 o'clock 15 minutes candle. Within half an hour, 30 minutes, within half an hour, the trade is completed. In 1 o'clock 30 candle, 5 minutes candle, it reached the target. Within 30 minutes. And if you did not do this analysis, you would have missed this opportunity. Let us assume if one of your trade is stopped out here. That loss you would have recovered in this trade. You please do such kind of analysis. Go to 15 minute, go to intermediate time frame. From your lower time frame, go to intermediate time frame. And then draw the next lower time frame zones within that intermediate time frame level. Don't draw beyond the intermediate time frame zone, because intermediate time frame zone is violated. Now it is no more a bullish trade setup or bearish trade setup stocks. Hope at least this information will give you some clarity about when you need to exit. In case if your zone is violated, how you can capture the next trade. within the bullish or bearish trade setup. Hope this video would have given you enough clarity. Now I hope you will be in a position to use bullish and bearish trade setups for monthly income trade, weekly income trade and daily income trade in much better way. Even though I give you DIT example, same concept you can apply to MIT, same concept you can apply to WIT, that is a monthly income trade or weekly income trade. You can apply the same concept. Only time frames are changing, but the concept remains same. If you have any questions, please put them in the comment section. Hope this lesson will be useful to you. Let us all meet in our next lesson. Thank you.